There are many factors that impact the value of a business. For most businesses, these can be grouped according to the industry in which the business operates, its historical performance, its clients, its staff, and its systems and processes. So let's take a look at these factors in relation to the financial planning industry. Financial planning industry is generally heavily regulated. At any time, there are existing regulations and usually some that are proposed. In relation to existing regulations, an important question is, how is your historical performance in relation to external compliance audits? In relation to proposed legislation, you might want to consider the impact on your business of the proposals. And more than just impact, what steps can you take to prepare for potential changes to regulations? A well-prepared organisation will generally attract a higher value. Prospective buyers will always look at the historical performance of an organisation. Has there been profit growth year on year across the last 5 years? Is the revenue growing? And importantly, what's the revenue mix? How much of the revenue is recurring and sustainable? Are expenses under control? And is there good separation between personal and business expenses? What's the business's performance in relation to complaints? Unresolved complaints will generally diminish the value of the business. When looking at clients, a prospective buyer might consider whether you've segmented your client base. In other words, have you identified common characteristics among groups of clients? And having done so, have you then tailored your services and fee structures accordingly? Are your clients loyal? Do they stick with you? And what is the client's connection? Is it to the firm, or are they connected to an individual within the firm? Firms with a high connectivity to the firm will generally attract a higher value. When examining new clients, prospective buyers would like to know how many and how good. In looking at your staff, you might want to consider your retention history. How good is your business at attracting and retaining top quality staff? Having retained them, do you have agreements in place? And do those agreements restrict their ability to take clients should they leave? Is there a heavy reliance on one staff member or a small group of staff members? Businesses that rely heavily on individuals will generally have a diminished value. Systems and processes are important in the value of a business. A business with structured systems and solid processes will generally attract a higher value. So consider your own business. Do you have a client relationship management system? And if so, do you use it? Do you use it to manage your client relationships and the communications that you have with clients? Do you have a management information system of some sort? And if so, does it help you to examine the profit drivers in your business? Can it help you with forecasting? Do you know what your cash flow and profit will be across the next 12 months? Can your management information systems help you with modelling? Can you predict the financial impact of decisions that you might be making today? Finally, do you have systems for managing your workflow and making your business more productive and efficient? How easy is it to produce an SOA in your organisation?